Voters in the United States went to the polls on November 8th and elected Donald Trump. While President-elect Trump's campaign reflected his views, we'll gain more insight into the direction his administration will take in the coming months. And of course, Congress will play a critical role in the development of future policies. I'm Ann Combs, head of Vanguard Government Relations, and I'm here today with Roger Aliaga Diaz, Vanguard's chief economist for the Americas. We're going to discuss the impact of President-elect Trump's victory and what it means for the markets. Roger, thank you for joining us today.
Great to be here, Ann.
So how have the markets been reacting to the news of the Trump presidency?
Well, it was expected to get a little bit of heightened volatility, increased volatility from the fact that the markets were pricing in a different outcome. Although we saw the polls moving in the weeks prior to the election, but clearly the markets are digesting the news and the surprise factor. We expect basically over the next couple of weeks to basically this process to continue. It's important for investors and for our clients to keep in mind that that normally happens in election processes, and sooner or later markets always go back to fundamentals. They basically go back to look at the economy. It's important to keep in mind the resiliency the U.S. economy in particular has showed compared to a much weaker global economic environment.
Right, well, that's a great point. So let's put it in some perspective. How have the markets reacted historically to this type of an event?
Yes, in every election, volatility increases, particularly in election years where there is a change of party in the presidency. Our basically data analyst shows basically there is a 30 to 40% higher volatility in years where the election leads to a change of
30
party.
to 40%.
Higher volatility than normal. And if you add to that the surprise factor, the fact that markets were expecting a different outcome, clearly that's understandably. But at the end of the day, markets are much less ideological, much more pragmatic than the political discourse. Right. And again, markets do go back to fundamentals, do go back to the economy, shifting the focus back to the key drivers of the market, right, as opposed to the electoral process itself.
Right. So what advice do you have for investors during the period of uncertainty we'll face over the short term?
Basically, stay focused and keep perspective, and above all, don't make basically drastic changes to your portfolio. Right. And there is a couple of reasons. I mean, it's always a good advice, but it's interesting to understand a little bit better why we always say that. On the one hand, is really the difficulty of predicting a very nuanced process in terms of how what starts as a political proposition or proposal ends up as an actual policy being implemented, and right, what the impact that has on the markets. Timing the markets is very difficult.
So what do you think the Trump administration means for the markets long term?
Well, there are a couple policies in Trump's platform that are that, to be honest, have received broad support across the economic and political spectrum. Economies of all colors basically have been supporting the idea of some sort of tax reform, particularly corporate tax reform, infrastructure spending also that goes with that. Those are the most concrete policies that I would say will receive attention from Congress. Hopefully, they will pass quickly, but I'm not sure how that optimistic.
Quickly is a relative term with Congress. I would agree with you, though. Those proposals, both infrastructure and tax reform, in particular corporate tax reform, have broad bipartisan support, and I think there is a possibility for movement. So, Roger, you've talked about the expectation that there may be volatility in the markets in the short term, but what about longer term, the economy itself? How do you see this playing out?
We are optimistic about the long term, and the reason, again, I mean, some of the issues that have been debated during the campaign have been quite polarizing, but they have been debated at a very high generic level, and that has left a lot of room for a very healthy dose of more debate. So we think that as deep and divisive those topics are, we think that over time that debate will shape the actual policy implementations.
Right.
And because of that, we're not that negative on the markets and the economy.
So we've talked about the markets and the economy. what about we're talking to our investors? What about Vanguard?
To me, is again the same concept. Is a broad asset base that goes across different asset classes and diversify even globally. Really tell us that Vanguard can withstand any type of volatility, especially short-term volatility of the one that we're talking about.
Yeah, we're well positioned to.
Yeah, no concern.
Well, Roger, thank you so much for joining us today. This was really fascinating. And thank you all for joining us as well.